Well, it's less than 24 hours and we'll get the big union budget in front of us. Actually, a little more than 24 hours. But we have our entire research team now to tell you the important things that you need to watch from every sector perspective. So let's get our team now, as you can see, in full strength yet again. But before we go sector by sector, let me toss to you, Lata, what are the big numbers that you need to watch tomorrow?
Well, as we just discussed, okay. All right, let's get to the macro later. Let's stick to markets first. Go to the banks first, Ekta.
Lata, well, now the expectations from the banks, I just want to, put in some feedback that I got after what was announced yesterday, indicating that the government is now working 365 days of a year. So it's not necessary that the budget document will entail all of the PSU bank reforms that the market is looking for. But, however, a vision could be announced and maybe a time frame on those counts. So overall, the first most important thing that the market wants to hear is the nature of the bank recapitalization. For example, will it be performance-based? Reason being that the government allocated around 6,990 crores to 9 PSU banks on efficiency ratios as opposed to the 11,200 crores that it had outlaid in the budget in July. So that would be one key point. Secondly, we could see some amount of enablers for PSBs that don't meet the criteria, such as DVR shares, etc. Now, the Gyan Sangam PJ Nayak recommendations would be one thing that we could see taken forward in the budget as a vision document. For example, the government holding going down in a phased manner, the Bank Bureau Board, the Bank Investment Company, greater autonomy to banks, something that we heard in yesterday's announcement as well. Additionally, tax breaks for 3-year deposits versus 5-year under ATC. Banks may get fees for direct benefit transfer, incentives to increase activation on accounts of Jan Dhan Yojana, as well as PSL norms could be reviewed with a focus on making it easier for foreign banks, etc. And maybe affordable housing will also get a huge boost. So housing finance companies would be in focus on account of it.
Oh, absolutely. Well, the big thrust could be on infra. So, Pragya?
Well, I'm consolidating capital goods, infra and power in this link. So more importantly, first, the reduction in minimum alternate tax and dividend distribution tax. Minimum alternate tax, the expectation is it will go down from 18.5% down to 7.5%. Biggest positive will be for Adani Ports among a whole host of companies, because that company has 16,000 acres of notified SEC land and will be the biggest beneficiary. Second, removal of MAT for all the infra players, because it negates the benefits that come in from the ATIA tax holiday. So that will, the expectation is to abolish it, will be positive for the entire infra sector. Third, the extension of a 10-year ATIA holiday, which is a tax holiday beyond 2017. Last year also it got extended for 1 year, so that extension will be important. Just for viewers who don't know this, ATIA allows the exemption of tax for 10 out of the 15 years of the entire project of life. Fourth, higher fundraising for the road sector, because that is the low-hanging fruit for this government, is an important thrust area for them. The first set of ordering in the infrastructure sector will happen here. It will be positive for a lot of the EPC road players like NCC, Ashoka Bilcon. Finally, renewable energy will be a very, very important sector to watch. So on the wind side, generation-based incentives and accelerated depreciation benefits to continue will be positive for Suzlon. Also expect some big announcements on the solar structure, especially on the inverted duty structure on solar cells. So that will be important. So those are the 5 key expectations I'm watching.
Yeah, watch the P&Ls of the solar companies before you buy them anyway. Real estate companies, Sonia?
Well, this time around there'll be a big thrust on real estate. That's what the buzzword is. The first and most important one is that there could be an increase in the income tax exemption limit on repayment of home loans. Currently, it's at 2 lakhs. There's an expectation it will be raised to about 3 to 3.5 lakhs. The second is that there's an expectation that for affordable housing, interest subvention, higher FSI, or a tax holiday could be provided to developers. The third is on REITs. Now, there's an exemption of DDT or dividend distribution tax at the SPV level that is expected. This is in order to make REITs more attractive for developers. There's an exemption of capital gains tax when the asset is transferred to REIT. That is expected. And finally, no capital gains tax on sale of assets from the REIT structure to any individual or company. That is expected. Only if these come through will REITs become attractive. But let's go across to Nigel and find out what the expectation is from the cement sector. Nigel.
So with regard to the cement sector, broadly watch out for the excise duty. Remember, currently it's quite complex because it's 12% plus a fixed rate on every bag of cement. So any kind of simplification, that will be a positive. And if it's maintained at the current rates as well, that as well could be a positive. The second big factor we're looking at is a reduction in the customs duty on petcoke. The biggest users, Sri Cement, they almost use close to around 100% of their fuel requirement comes in from petcoke. So that one would be the biggest beneficiary. Also, any kind of increase in import duty on cement, that will be a bit of a positive for the entire sector as well. And removal of duties on imported coal as well, that will help some of the cement companies, namely the likes of Ambuja Cements and in particular India Cements, because that's on the coast. It gets more than 75% of its total requirement via imports. So that as well could be in focus if in fact we see any kind of reduction in the duties on imported coal.
Actually, any boost to constructing anything is going to be a boost for the cement companies, like yesterday's rail budget. But in the oil companies?
Well, it's an important budget for oil and gas sector. There are two important things what everyone is watching out for. The first, I think everyone on the street, all the reports are saying that there could be a reintroduction of 2.5% to 5% of custom duty on crude oil. If this happens, this will be positive for upstream companies like ONGC, Oil India, and negative for OMCs. There could be an upside, FY16 upside of anywhere between 1.4% to 5.5% for ONGC, Oil India, and CLSA says that the increase in custom duty could be negative for OMCs, and they say that every 1% increase in duty will pull down GRMs by $0.3 per barrel for OMCs. So watch out for that. And second, of course, is the subsidy. Everyone on the street wants a clarity on what is happening with the subsidies. I've been reading a lot of reports. They clearly say FY16, watch out for oil subsidy number. If it is anywhere northwards of $350 billion or 35,000 crore, that could mean that upstream companies like ONGC and Oil India will have a net realization of at least $60 per barrel. That number is very important. 35,000 crore. If anything is below that, then clearly the realization for ONGC Oil India dips lower. So that could be important. Of course, a step up to cut LPG and kerosene subsidy. If that happens, good for ONGC Oil India. On the taxation side, on the direct tax side, clearly, analysts are expecting that the oil and gas sector may get tax holidays up to 10 years, just like Infra, and there could be an extended tax holiday to LNG terminals, in which Petronet LNG could be beneficiary.
So many tax holidays. I thought they were fighting for a deficit. Ushank, fertilizers?
So mostly it's a custom duty which can be expected to be lowered on the imported LNG. Currently they stand around 5%. But otherwise also recently there was a news that the pooling of domestic gas prices with the imported LNG is something which can be seen, and it can lead to around $1 reduction in the final prices of the gas. Otherwise the industry is also expecting there can be an announcement on hiking of urea prices going forward, so as to and maybe some decontrol can be applied over there, and this will lead to the overall subsidy burden for the industry coming down. So keep a watch on stocks like RCF, NFL, Chambal Fertilizers and Deepak Fertilizers.
Alright, let's go across to Mangalam and find out what the expectations are from the logistics and the textile sector this time around.
I'll tell you what, this government has put a massive thrust on improving the experience of India. So the sectors that I speak about will be big beneficiaries of this thrust. A sector which is important in delivering a good experience is the logistics sector. Remember, contributes around 13% to the GDP. And there are expectations of recognizing this as an industry which will open new avenues for cheaper funds. And also a word on the implementation and timeline for GST would be a positive for all the logistics companies. Another beneficiary of the Make in India program will be the textile sector. And there are expectations from the industry to extend the TUFS benefit to the textile machinery industry and reduce the excise duty on man-made fibers. This will be increasing their export competitiveness and increase investments into the textile sector. So this will be positive for both small textile players like Mandana Industries, KPR Mills, and the biggies like Arvind, Himmat Singh RCD and Alok. And finally, the experience of India cannot be improved without improving the hotels and tourism industry. And India is seriously short of hotel rooms. So there are expectations to lower the bar for recognizing hotels as an infrastructure project, which will get a lot of small and mid-sized hoteliers into play. Someone like a Royal Orchid Hotels, Viceroy Hotels, TGB Banquets and the like.
All right. Pragya, FMCG companies.
Will be very, very important for the government this time, and any announcement that points towards boosting of demand, especially with regards to lowering of personal taxes, but that will be only one of the measures that the street watches out for, will be very important. If we are talking about budget, we have to talk about excise duty on cigarettes. This time, what could be interesting is the last time we saw a length-based specific duty structure. So, VST got impacted so much, ITC did not get impacted, so that blended impact will be very important to watch. The expectations of the street are all over the place. space from 5% excise duty all the way to 20%. The majority of the analysts are actually hovering around that 8 to 10% hike. But Lata, remember, if it's a 20% kind of a hike, excise duty hike on cigarettes, then remember it will be the 4th consecutive year that we see that kind of an excise duty hike. Will be very negative for all cigarette players. And finally, a clear roadmap on the implementation of GST. Remember, this makes the organized pan-India FMCG player really attractive compared to the unorganized sector. So anything on that will spur positive sentiment on all of these, FMCG names. So watch for that.
All right, thanks Pragya for that. Let's go across to Ekta and find out why she's watching, or rather what is expected from the pharmaceutical space this time. Ekta.
Well, any change of MAT on SEZs would be positive. Reduction of import duty on APIs or active pharmaceutical ingredients, plus customs duty on formulations. R&D tax benefits is something which is going to be watched out for example, setting off cost of new chemical entities against taxable income, and any investment in public healthcare, hospitals, medical devices will be keenly watched.
Okay. Sonia, you will be watching the automobile companies.
Well, not much is expected this time around. There will be no reduction in excise duty on cars. That's something that's expected this time. In fact, only a couple of things. There could be a scrappage policy and incentives for replacement of old vehicles. So that's something. A rationalization of the inverted duty structure in the tyre sector. And on the JNNURM scheme, it's interesting because there's an expectation that the JNNURM scheme will be renewed and renamed after Atal Bihari Vajpayee and could be named Amrut, which is the Atal Mission for Rejuvenation and Urban Transportation. So that will be something interesting. But let's go across to Reema now and find out what the expectations are in the IT and the telecom sector. Reema.
Well, not too much by way of expectations on IT. Watch for any roadmap on Digital India. If it does come, it's likely to come through. There is going to be a lot of thrust, and that could open up, some contracts for the Indian IT space. And also watch for a reduction in the MAT on SEZ. That could, if it comes through, it will be positive for IT companies. On the telecom space, watch for any clarity on a proposed Swachh Bharat cess. Now, we haven't spoken about it, but the government plans to mop up about 1 lakh crore in the next 5 years for Swachh Bharat. And for that, they could impose a cess of 0.02 to 0.05% on telecom equipment and telecom companies, and that could come in as a negative. And apart from that, smart cities and therefore infrastructure required for that. If it comes through, it will be a positive for Aksh Optifiber, Sterlite technology. And also watch for the total amount from the spectrum auction, which could be budgeted in FY16. If it's a large amount, then it would imply that the government is planning to do some more auctions, which means for more payout.
Yes. Nigel, metals?
Metal space, definitely watch out for iron ore export duty coming down. It's at 30% currently. If it comes lower, good news for Sesa Sterlite, and for NMDC, they're making some losses on the exports, so that'll cut their losses. Also watch out for a hike in import duty on flat steels as well as long steels. Currently it's at around 5 to around 7.5%. Moving it higher above that 10%, that will be a positive. Though ferrous makers, they tell me it has to go above 20% to see any kind of material change. Also watch out for any kind of change in terms of iron ore pellets. Currently the export duty is around 5%. If that is reduced, good news for Kalyani Steel. If it is hiked, then in fact it will be bad news for the likes of JSPL as well as NMDC. They're exporting pellets currently. Change in terms of custom duty of copper concentrates. Our copper makers, they're importing most of their copper concentrate requirement. That will be a positive, while putting duties on copper as well as aluminium. That will protect the copper as well as aluminium producers. So we watch out for Sesa Sterlite as well as Hindalco on that front. And finally, 5% export duty currently, 5% import duty may be imposed on alumina. If that happens, then it's bad news for Nalco.
All right, guys. Thanks for putting all of that into perspective for us. And finally, the big numbers that we should watch tomorrow, Lata?
Yes. Well, actually, the nominal GDP number on which everything is based, because fiscal deficit, everything is a percentage of that. That, as Dr. Govinda Rao said, the Finance Commission itself has assumed 13.5. Most of the analysts are expecting a 13% assumption, which means the total GDP will be 143 lakh crore. Anything beyond that will be difficult for the market to believe. But that's a fairly decent number. Fiscal deficit is the other big number, but I think they'll stick to 3.6. That's almost the consensus. So the actual fiscal deficit number will be 5.15 lakh crore. If my GDP number and my percentage 3.6 is correct, then 5.15 lakh crore should be the number that everyone would watch out for. a lot of people, foreigners in particular, are looking at the revenue deficit also, which is entirely dependent on how much subsidies come down. Because subsidies is the big revenue element. If that is substantially brought down from 2.9% to 2.5 or 2.4, that will be big. It's not very easy, but if that is done, that will get a bigger kudos than the fiscal deficit itself. Market borrowing is obviously important for the bond market. That's expected to come in at close to 6 lakh crore rupees, 5.98 thereabouts. But since there is a fix on fiscal deficit, it's unlikely that there'll be too much of disappointment or shock on that. Food subsidy is expected to come to about 1.2 lakh crore, very similar to actually the previous budget. Fertilizer subsidy is expected to come down significantly. People will watch out for that simply because the inputs have become cheaper. So 55,000 crores is what is expected compared to 75,000 crores in the previous year. Fuel subsidies is the one that everyone's watching out for. Around 25,000 crores is what they will set aside for LPG and kerosene. That is a good 40-50,000 crores more than the previous number. They're expected to make the big money over there. So that will be watched out for. And then, therefore, the total subsidy, if it can be restricted to 1.4% of the GDP, that will be a fairly big achievement. And I think that can come simply because the global crude prices are kind to us. Tax revenue assumptions are important. We just heard Prasanna and Govinda Rao saying that 14% tax revenue growth is par for the course. I would have thought that's tall, but that seems to be the street expectation. So if they assume 14% growth in tax revenues and therefore 14.5 lakh crore as the total kitty, that will not be taken as incredulous. Though this year the government has not delivered that. They've delivered only about 11% in terms of single digits in terms of tax revenue growth. Net tax revenue to the centre is what everyone will look forward, because a larger part is going to the states. So until the Finance Commission had announced, everybody was expecting that 10.5 lakh crore is that big number which will get distributed for various schemes. But now that might go full 1 lakh crore lower to 9.5 lakh crore. But the assumption is that whatever goes down over there will be made up in the plan expenses. So plan expenses is the big thing that everyone will watch out for. Like you did in the railway budget, everybody was waiting for a 6 lakh crore plan budget number. Now it could go down, but alternately it may not go down, and there will be this big contingent liability plan which the government might float. So that is where you will see a lot of opinions, interpretations, etc. But we have to wrap up. Our producer is very angry with us that we have gone on and on, but we tried to give you a concise snapshot of what investors are expecting, traders are expecting from the big budget tomorrow.